following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. It's Thursday, and it's still cold here in North Carolina. And somebody was saying on the Chesapeake Bay up in Virginia, 18 for a high today. That's amazing. I think the high here today is going to be 16. And I'm hearing down in Clearwater at TFNN, it's 40. Is that right? Huh. That's just amazing. And freezing. Actually on Tampa Bay. Well, Tampa Bay, I don't know if it's called something else at Clearwater in a little nook they're in. But, yeah, it said they're breaking records. That's amazing. I mean, it's just amazing. And as we talk about that, we're going to defer directly into crude oil and natural gas. Goodness gracious. Crude oil, I'm seeing my continuous contract still on March, guys. So correct me if I'm wrong, but that's what eSignal's giving me is the continuous is still March. So I'm going to look at the raw contract on crude oil still March. Anybody wants me to look at April or... Let's see, natural gas, what do we got here? Just make sure. So let me just check one thing on natural gas here because somebody told me look, natural gas had moved to April, but let me just make sure of that. Yeah, I see still the front month on March on natural gas. If you guys know any different, let me know, but I'm going to kind of go with that. Since that's what eSignal is saying is the front month still, and that's what we got as the front month. And I'll look at the 30-year in just a second here. So let me get into crude oil really quick and get going. As we talk about the world's energy supply and the freezing temperatures here, we're going to take a look at these two things while we're talking about that. 5104. Caught a couple of good moves off of that, a couple of good bounces if you kind of step back and look at it. In fact, caught some 5 to 6% moves off of that 51 area, general area. But now we've got some supply numbers that have come out, obviously news-related situation. We're below 5104, and for all intents and purposes, it's not okay to be long right now on that kind of breakout mode and using this as a fence. So crude oil's been, a decent move from the 44, 45 area, and that XLE has been kind of nice as far as that goes, but on a relative strength trade. But right now, you just got to wait for it to cross the border again at 5104 or come all the way back into this 4465. But remember, if we do that, if we come down to the 4465, we're more than likely going to pierce through the most recent lows, and you got to watch out for that. I wouldn't look at this as a double bottom yet. This is a super wide profile on a relative scale. If you look at this profile and the height and width of it relative to all the other profiles that we've looked at, and I mean going way back in time, obviously this is going to be a volatile situation in the so-called balanced area, and the balanced area is going to be expanded as this has predicted if we get into this area. Now, again, bottom line in a nutshell, closes back above 5104. It's going to be okay to get back in the water. Excuse me. But right now, we're just kind of sitting tight. On a very shorter term basis, or much shorter term basis, you still got on the 240s at 5114, which coincides with that 5104. That's just going to be kind of a lid right now, and you've got to pay attention to that. And let me see here. Okay. All right. Taking a look at natural gas. We're going to look at the March contract. Excuse me. Checking on my own spit again today. Here we go. All right. So we're going to look at natural gas. And this has finally shown some promise closing above and kind of staying above 28.16. I think wishful thinking on this is going to be the 3.031 up top. And you could look at this as a stop-oriented situation below 2.816. Some guys were asking about this morning. I don't really trade natural gas myself. I got call it an historical event. We when natural gas was, I don't know if you guys remember this. When natural gas, I guess it was it 10 years ago? Was trading about 13 or 14. Remember? I don't know if you remember. I can pull up a historical chart for that. And my goodness, that was a harrowing experience. That thing moved an entire point or two at a time in a day back then, and I stopped trading it back then. It's a tough instrument to trade. There's no doubt about it. But the bottom line is we've been in a big time downtrend. We haven't had any technical damage on the upside, and yeah, exactly. And 3.03 would be the targets up top, and that would still need to be breached to really get me excited about going long natural gas in a longer term sense. Now, in a shorter term sense, again, different time frames people are trading. You got a little bit of a launching pad situation here, possibly with tight stops below, and just kind of let that thing possibly breathe back up to some resistance areas up top for right now in the short term. That's the take on that. Let's take a look at what we were talking about on Tom's show yesterday afternoon, briefly in between talking about buying ammo and guns and stuff like that. Let's take a look at the 30-year. and I got to say something. The 10-year and the 30-year have some longer term inflection points they're having to deal with right now. And I don't have a lot of days back, but I've got enough days back to create my two most recent profiles. I'm trying to conserve bandwidth here for this show and not try to pull a zillion days back. So that's why you only see two profiles here. But you've got something to kind of lean on here at 144.08, that general neighborhood. Obviously, we had the breakdown. This is what we talked about on the show yesterday on the Wednesday afternoon call-in that I do on Tom's show. Here's this 149.04, which is the initial close below, kind of retest, rattle around, and then that second close. And this is the intermediate situation on the breakdown, but the long-term trend, in my opinion, is still up. Now, I did read some articles. I don't actually like to read too many articles because I kind of want my mindset to be a purist, chartist, most of the time. And as I look at the 30-year, I read some articles like, oh God, is everybody going to be running for the door at the same time? And the Fed might be concerned about that. I don't think they're concerned about anything. I think they're concerned about primarily if the stock market ticks down, they're going to start the rhetoric again, as we've been talking about, the same stuff they've always been talking about. Try to keep the market up, ignoring any type of forecasting on any economic possibilities with the U.S. economy, and just kind of paying attention to the U.S. stock market as the guidance system that they're using. That being said, we've got technical support at 144.08 on the 30-year on the longest term, and that's going to, like, weekly closes below there is going to really kind of change my mind a little bit. But again, I mean, it's kind of not terrifying, but it's, you're still going to have to look at this with a little bit suspect eyes, because you got that big fundamental in the background stance that they're taking. So again, from a pure chartist standpoint, you got the last kind of support here on the longs at 144.08 on the 30-year, and you could just orient stops from there, especially on weekly closes. And then, hey, if it goes back up and you got stopped out and it goes back above where you get stopped out, you still have this particular feature at 144.08 to just kind of play around with. And remember, it's lose a little, lose a little, lose a little, make a lot. And this particular bond note trade has made a lot already if you've been kind of in this mindset of the technicals that we've been talking about. Sorry to drag that out forever like I usually do. And let's take a look at the 10-year. So as we were talking about the 30-year with that kind of fence down here, the 10-year's got a somewhat similar fence around 127.27, 127.24. Okay, 127.24, 127.27. There we go. And we're trading pre-market 127.25. So we're right at that DMZ, and we poked down below. Excuse me. I'm sorry. I keep coughing this morning. And 128.04 up top. So those three inflection points, which are very, very powerful, between 127.24, 127.27, 128.04. That's a pretty small range to have those three powerful inflection points line up. And by the way, you can basically get those in the scanner here as I'm pulling it up, and I'm just going to go into the 10-year, and I'm going to see that there's the 127 in decimal form, 0.8625, and there's the bottom at 128.04, basically 0.135938, and there's the picture of the landscape levels, and there we go. Okay. Do they still sell Sucrets? Is that still a product? Anybody can let me know about that. I'd like to know. Is that too old school? Do they even sell those anymore? Sucrets? I might get one. So again, to sum up the treasuries. I think it's kind of a wait and see till we get a weekly close now. You got some stops you can orient around here, but that's the summary on the 10-year. Let's get right into the U.S. futures, because what I want to say about this, I actually wanted to start out with this, but we had some crude oil news we had to deal with. This is a little bit of an indicator, if you will. I'm going to go in here and I'm going to kind of refresh my screen. I'm going to get my dials back over here on the left. One of the things that's concerning, you see this number right here, and you guys have the admin version of this if you're a TFNN subscriber, and you can actually see these numbers, and not only see the numbers, but look at the charting information based on these breadth numbers. Okay. So as I look at them, it doesn't give me new profiles attempting to appear when I look at this, but that's okay. I know that this thing's been breadth positive on an intermediate and long-term basis for a while, and that means I'm supposed to be buying support when it's offered. The one thing that is concerning right now, excuse me, is new boxes attempting to appear on our S&P 500 stocks on an intermediate basis are approaching 12.5%, which is really, really high. And I want to talk about that when we come back from the break. So you guys hang around, and we'll get into that, and I think you'll find that interesting. Be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We okay? Okay, guys, back. I hope you guys can hear me. We were talking about something actually yesterday and the day before that was starting to get larger, which were the percentages of new boxes attempting to appear. We're focusing on the S&P 500 breadth, and we're kind of focusing on this particular percentage here that's kind of getting, really weirdly populated here, and we're going to probably have quite a few stocks, namely 62 today, start having some new profiles appear on the internals, 62 of the 500 internals of the S&P 500 stock with new supply areas up top. All right. Now that's not happening on a weekly. Don't see it happening anywhere else right now, but that's an intermediate time frame sign in itself. Now, what does that kind of mean here? And by the way, when we look, and my God, my throat's sorry about that, folks, but the S&Ps, as you can see, by the way, on our S&Ps futures March contract, see that daily yellow cell up there? That means that we're more than likely going to have a new box appear on our S&Ps in the very near future. All right. And what happened is we started getting that indication. I think we're at maybe 11% or 12% even on the close yesterday on the S&Ps. Lo and behold, we got the orange bar today on the futures. That's a sign in itself that we at least could have a resting period, and we may not want to bust out on the upside again. And therefore, we may have some trading opportunities on the short term to start rattling around here and do some day trading finally without, and the problem is with day trading, you're on the wrong, let's just say a lot of guys out there are trying to short this. It's gone too high, and they're not paying attention to what we've been talking about, which is long-term trend is up, breadth has been positive. As you look at these dials across the board, and you're supposed to be buying supports and breakouts and blocking out the short side of the marketplace, at least on the intermediate, long-term, and more than likely the 240s. And the 240s have been regulating this trade up. So I'm just giving you a little bit of a heads up here. We kind of reached that 2100, didn't want to be there. And now we've got a new set of 62 stocks that are more than likely going to have supply out there on the opening on the S&Ps. We've got a daily new box attempting to appear on the S&P futures in general. And in my opinion, we may start traversing at bare minimum down to 2082. I like this reversal action. So what I'm saying is 2093, 2094 could be a resistance area, trading against a long-term trend up with stops above, and keeping playing the same game to reach some lower numbers, mainly 2082, 2083, and possibly even lower, based on a new supply area that will give you some lower targets here. And I have no idea what this algorithm is going to output to give you those lower targets. But, this is a sign that we may be in a little bit of a consolidation, new supply up top on the futures in general. And I'm not calling a market turn right now. I'm just saying there may be some shorter time frame opportunities to trade on at this stage. Okay. Any questions about that? I'll be more than happy to answer them if you guys want to call in. I think the number's on the TFNN website, and I will get that number to you guys that don't have access to the website right now. Catch you. Okay, here we go. That number is 877-927-6648. 877-927-6648. And if you're watching eSignal overseas, the international number is 727-445-1044. I don't say that enough, and I apologize. I'll start saying those numbers more often now. All right, so that's the situation on the S&Ps. Excuse me. We haven't talked about the DAX in a while. I just want to kind of hit that because we've got some guys out there that have been sending emails to me. I'm not a big fan of shorting the DAX, and I haven't been a big fan of shorting the DAX. And we talked about looking at support areas, big-time support areas, when they're provided and when we're there, just to keep buying this thing. And why is that? We're going to talk about that when we get back from break. I hear the music. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And just want to state that going down to see the guys at TFNN on Sunday night, and I'll be in their office on Monday morning, so maybe we'll do the show there Monday morning. And told the programmers that there'll be a lynching if they don't have the paragraphs in there that I've been promising and the charts, snapshot charts that show you a bar chart with the levels on it, in addition to the landscape by Sunday night. And again, there'll be executions on the TAS side if that doesn't happen, and that's to your benefit. And those threats are real, so we'll figure that out. And here's the DAX, and I'm looking at the landscape view and getting all the inflection points kind of surrounded in my head here. And there's our dailies, there's our 240s, there's our 60s. And as we understand what those levels are, we're going to go into the scanner, and we're also going to look at the Eurostoxx 50 breadth. Now we got about 12 breadths in here now. Nikkei, the main one's Nikkei, the Nifty 50, Eurostoxx 50, NASDAQ, Shanghai, Hong Kong, and S&P 500, obviously. But the Eurostoxx 50, another Europe breadth situation, extremely positive. And the DAX that we're putting in here, the DAX will we'll be able to show breadth, so it'll give you another piece of the puzzle here, hopefully, in trading the DAX. But all that being said, and going to the DAX chart, and as we look at the DAX chart, just to kind of give you a snapshot here, let's just kind of step back for a second and see that we started breaking out. We got past the 10,000 hurdle. We found support a couple of times, and now we're kind of compressing into inflection points up top. Poked our head above already today, new highs, and have gotten back down below this inflection point. But as you look at this, we've kind of been making higher lows and compressing into this. I don't want to call this a flag or a pennant in classical technical analysis standpoint, but as that breadth stays positive, you don't want to short these inflection points. That's telling you to buy support, all right? And the only way we'd start looking at selling resistance is if, in my opinion, we had some breadth changes on that European Eurostoxx 50, and the DAX is very similar. I've been looking at it, that we haven't gotten posted in the scanner. But as we look at that, I think your edge is to lay off shorts still. And we've been talking about laying off shorts on the DAX and just, waiting patiently if we did break down for new support. And that's still the mindset that I have. And why is that the case? There's another glaring note here that we want to take a look at, which is Euro. And, they want to devalue this currency, and therefore the repricing of the DAX may happen by default, in addition to a couple of other tricks that they're trying to play over there to spurn the economy forward. So that's my take on the DAX, and I think you still got to, if you're looking for a market turn with that product, I don't think we're at that stage right now. So therefore, block out the short side. I don't know if that's what you want to hear, but that's my take on it. All right, we've talked the yen lately a lot, and I'm just going to kind of lay off that. That's still, in my opinion, one of the best trades on the books, and we've been talking about that being the best trade on the books since the first time I started talking to Tom O'Brien, actually. And still looking for breakouts above 119.44, and that's the case. And that started 2,000 ticks ago. Excuse me. Goodness gracious. I want to pull up one more thing here while we're kind of going offshore. The ruble, kind of broken down on this trade, and we're buying support all the time. And if you're trading this product, there's our daily, here's our weekly. Here's the back up the truck situation. And the reason I pulled it up is because we got a new profile around 59, 13, 14 is where you want to wait patiently at this stage, in my opinion, for this thing to hopefully get in that neighborhood, and then you can orient stops below and just start piling into this thing, because I still think this is a great trade from the devaluation of the ruble against the U.S. dollar and the buying of that in an inverse relationship based on how they price this, if that makes sense. All righty. Dollar, not even going to review it. The main line here is 93.67, stops down below, stay long for a while until that happens, and then you got another chance to pick it back up a little bit lower. Not going to belabor that one to death. NASDAQ, just to give some levels real quick here. Thinking about that whiskey and honey comment in the den here. Man, this is just on a, and let me pull up the scanner here so we can get an idea from a breadth standpoint. We've had some really, really good success, and maybe I can get into that on Monday when I'm in Clearwater with Tom on the show, because we're going to be launching some of these signals in the TFNN environment. Really good success with 60-minute crossovers on a short-term basis. You might want to keep your eye on this on the NASDAQ to give you a little bit of a lead in on some short-term trading. And we got NASDAQ breadth up right now. So just kind of be aware of that if you got the scanner. There's nothing to glean any hope off of up here on inflection points on the NASDAQ futures profiles on our daily, without question. But because of that situation on the S&Ps and some of those new supply areas happening, that may also affect the NASDAQ. And obviously, if you've been looking at U.S. futures indices type instruments to short, this one obviously has been one to block out relative to anything else because it's been showing its strength forever. You know, we have talked about doing some intermarket spreading. We actually, a couple of shows, we talked about a relationship that we used to do up in Chicago, which was put the S&Ps on one side of the equal sign and the NASDAQ and the Dow on the other side of the equal sign. So S&Ps equals NASDAQ plus Dow. In the ratios that you can play around with and balance, and actually take your charting package and do that relationship, view it as a spread and look at how that spread reacts. It's a really good exercise to do, and actually put our profiles on top of that if you've got our indicators. And we'll be more than happy to explore that more so. It's if you guys have any questions about it, but the NASDAQ has been obviously outperforming, and that particular spread is widening. And if you want to take a look at that, it's not a bad idea to take a look at that sometimes. Gold. Not in the long camp on this one right now. We talked about passing after we'd broken down 34.38, and now we're kind of coming up into inflection points. And when do you start? And we hit that 1200, which was the breakout point from before on the dailies and the weeklies. This is the April contract. So, you know, we got a little bit of a bounce off 1200, but again, I think this is kind of a stay away from this trade right now. And wait for some confirmations to happen. Don't feel like you got a lot of leverage here on the long side. The shorts are kind of still in control of this and have been in control for a little bit. We'll take a look at the XLF. Talked about a weekly close is going to be super important on this. The 24.47 weekly unfair highs. Still standing by that. I got nicked up a little bit here trying to short against inflection points as it was bouncing back up. But again, that's what stops are for. Pick a battle there, pick a battle there, and we're just going to kind of have to wait and see on this one. I don't like the way this is crowding around that upper weekly inflection point at all. We're going to take a look at Apple really quick. And pre-market, we're trading 128.60. As I can see on our 60 minutes over here, and we're going to look at the daily, and nothing. Don't stand in the way of a train. That's my comment on this one. No new inflection points appearing, and things on their highs go higher, and we don't have any confirmations here at all, any breakdowns on 240s or anything to start thinking about shorting this. So might want to stay away from that, stay out of trouble, let somebody else pick the all-time recent highs of Apple. Okay, a couple other stocks that we wanted to look at. I want to still look at this GoPro situation. Obviously had a big move down yesterday. Talked about, we're kind of right in the middle of a profile here, and we could reach higher into 55.17. We talked about putting some trailing stops in, but we also talked about a wide profile and being right in the middle of a balanced area. And that's what stops are for. And we've kind of just reversed. This is obviously not what you want to see from a bounce off unfair lows on the profile here. And we always want to pull up trades that I've talked about that, may have reversed or gone in the other direction. Just like the XLF, GoPro is a situation you just got to kind of sit tight here. And as we looked at this, you don't have a lot of leverage on this stock. All right, a couple of things I have written down. I want to look at AXP again. This was something that we talked about, maybe waiting until some new information appeared to really get some leverage, because we were down in the middle of nowheresville down here on actually, this was 2 days ago. We've rallied a little bit, and we've come off of, what is that, low of 77, and now we're trading 79. So some guys are asking about trying to pick this up down here possibly. Obviously, we've rallied 2 points since we started talking about that, and I said, you need to sit tight and wait. We're more than likely going to have a new profile appearing down here, a new demand area because of this yellow bar that we're seeing, and that's the situation on AXP. Here's our 240s kind of guidance tool. We talked about a breakout possibly above 79.6. That happened, but again, I think this is a volatile situation. There's a lot of money changing hands on it. You need to wait for a daily profile to appear. Is WTI, is that, you're talking about West Texas, or are you talking about a stock called WTI? We talking about crude oil or Russ? Or are we talking about crude? Okay, yeah, that's what I thought. All right, let's go to crude again. We talked about this earlier. Talked about staying away from it, actually, because we could just float around down here in the balanced area. 5104 getting back above is really going to have, that's just going to have to be a wait and see right now. I don't know if you can, I mean, there's nothing to really lean on down here at this stage. We caught some good moves in this. Can't hang on to things. That's a big no-no in trading. And this thing could go down to $20 like every article I read is saying, but, there's no reason to hang on past inflection points. So that's my take on crude oil. I'm going to go back to the old school stuff here and look at IBM because why? Because we had a new weekly profile appear this week on IBM, and we actually we talked about, and let me just go back to the daily here really quick. We talked about the inflection points 155.90, and I think Buffett's been talking about buying this thing in a large way, so that's obviously possibly been incorporated in the price action lately. But that being said, 163.09 now is another area of resistance to look at, but you got to take a look at this, and if we get a close above profiles on our weekly 160.55 this week, which tomorrow would, that might happen, might not happen, just got to pay attention to it. That's going to be the first technical damage we've had in IBM in a long time, and I could pull up profiles past 300 days, but I just didn't want to bury E-signal here. Why don't I do that? Let me just do that here. Is that 100 days? Oh no, hold on. Okay. As you can see, have a lower profile appear on the weekly. We may get a close above that, and that's going to be pretty damning for the shorts for a little while. But we've got another inflection point to pay attention to, 162.49, and the reason I brought that up is because 162.49 and 163.09 are going to have to be contended with. And in my opinion, that little DMZ up there, had some questions on this. That's why I'm pulling it up. Might not be a bad place to pick a battle on the short side. This stock obviously has benefited from the market lifting and some of the fundamental comments out there. But I think, if the market's showing that daily box supply attempting to appear on the S&Ps in general, you got IBM at major inflection points. The reason I brought this up today was I think you've got another opportunity to short IBM, as there have been many opportunities over the last year or two. Major inflection points lining up around that 162.50, 163 area, and we're trading 162.19 right now, and pre-market we're about at 162. So IBM may not be a bad area to start shorting this again. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. I got the Shanghai up. I was just going to talk about that, but I don't know if many of you guys are trading the Shanghai, so I'm just going to leave that alone. Just showing a little bit of a new breakout above 32.29 on the Shanghai. And I don't know if you guys watched basketball with Duke and UNC were in overtime last night, and Duke pulled it out in Cameron. And if you've ever, I mean, I went to NC State, so I hate both those teams in general, but if you've ever seen a ball game anywhere, that Cameron Indoor Stadium, it seats about 9,000 people. It is the most amazing place to see a ball game. I'll give them that for sure. And Duke campus, my goodness, if you guys want to see a beautiful place, if you ever go to North Carolina, just go out of your way to go there. Duke Chapel is just incredibly beautiful, and the Duke family built that entire place. It's built on tobacco money. Not too long ago actually, but what a cool campus. And Raleigh-Durham Chapel Hill is one fantastic area. If you guys ever get I know Duke was the favorite, Jay. I actually took the points and took Carolina, and I was about to come out of my seat when they went into overtime because I figured Duke would just maybe go into some free throw game. And yeah, I know but I took Carolina in the points. That was good. So anyway, get back on topic here. One thing I wanted to look at is still these March beans. Make sure we're on the same page here. New profile has appeared on the weekly, very small, very thin, and we've got this lid now at 10, 11, 10, 12. That's where I'm orienting stops around on the short side on beans. I've been a big fan of staying short beans. Got some great moves on this thing. But that's where I'm orienting stops above and looking for a pullback into 966 if you guys are trading beans. Yep. By the way, UVA, oh man, somebody said something about University of Virginia. That's Charlottesville is one cool. If you've never been there, that's a very cool area also. The old ACC teams. I hate it. I just didn't like it when they just admitted all those new schools into the ACC. Remember they used to have the Big Four tournament down here? It was Duke preseason almost. It was Duke, NC State, UNC, and Chapel Hill. That was a cool scene. The old days. All right, we're going to take a look at one more stock that I have been pretty hawkish on in general. I mean, we had the earnings situation that came out. We kind of floated higher. This is Amazon I'm showing right now, and I'm gonna go back in time a little bit here and look at this. Obviously, when that happened, and we talked about always being out of instruments, my opinion, out of instruments before earnings announcements come out. This is a great example of this. But Amazon, now we've got this profile that appeared last week. If we can get back down below 370 and have a close below 370 on Amazon, I'm going to look at that as putting stops above and looking at shorting Amazon. Okay, I know that's going a little bit against the grain. Here's the weekly situation. Again, we obviously had the earnings announcements. We talked about that. But again, looking for that to happen. And if we can get some closes below 370, 371, that's going to be, in my opinion, a little bit of a ripe opportunity to traverse back down. And I hope the stock market in general can pull back a little bit to give this type of concept some help with some targets down below 340 on Amazon. Yeah, Dean Smith's an amazing guy. If you guys want to look into his background and what he accomplished, had a comment of that on the den. So, guys, we'll pick it back up again tomorrow. Stay tuned for Steve Rhodes. He's great, and you'll be much wiser after listening to him. We'll talk again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.